So good morning. My name is Amitav, and on behalf of IDBI Capital, welcome you all in this live and interactive webinar on how to navigate volatile markets. See, we all know in the recent months, market has been volatile, and this scenario creates a lot of doubts on the minds of traders and investors alike. Many of you are aware, we conduct on behalf of IDBI Capital, we conduct regular sessions with the customers for sharing our research and understanding about the market. So I'm sure this session will also provide answers to a lot of your queries and help you deal with the current market situation in a better way. So we have with us today Mr. Miraj Vora, who is a derivative analyst and part of our expert research team. And he will be conducting the session today. So I would request everyone to keep your phone on mute. We'll have a question answer session after this is over. So over to you, Miraj.
Thank you, Amita. And I'll just also introduce Kshitija, who is with me. So Kshitija is also in the research team and part of as a research analyst, and she has been there in the markets for last 5 to 6 years and have been providing research. Previously, she was with Axis Securities, and from last 3 years, she is with IDBI. So first I'll be taking one part which is about the stocks, and then she'll be taking on the derivatives. She'll be taking on technicals and data which we can look before trading, or how this data would help us to trade in this volatile market, and then I'll be taking over for derivatives. So what we have seen in these markets, what we have seen in these markets is that we have been very volatile and trading with a negative trend, and majorly that trend has been there because we have seen a lot of central banks raising their interest rates. Now when central banks raise their interest rates, two things happen. One is that liquidity dries out of the system. Amitwa, I'm audible to everyone, right?
Yes, absolutely.
Okay. So what happens when central banks raise their interest rate is that the liquidity tends to dry out from the system, and once we see liquidity drying out, it has another impact of overall investment things also going out of the system. So that is where we have been seeing FIIs also pulling out of the system, plus volumes also drying out. Now another thing that happens with this is that bank profit starts increasing. So that is the reason if we see the SIP stocks for investment, the first three stocks are HDFC Bank, ICICI Bank, and SBI Bank. So why we have taken these three banks as in heavyweight banks are that these are the leaders. HDFC Bank and ICICI Bank are the leaders in the private segment. SBI has been the leader in the PSU segment. Besides that, the fourth bank, if you see, is Canara Bank. This is one PSU bank in the small and mid cap space where profitability has been consistent, and they have been managing to reduce their NPAs. Most of the banks have reduced their balance sheets very well. They have trimmed their balance sheets, have got lighter, reduced their NPAs from their COVID times, and this will now help them in this rising interest rate scenarios to make better use of it. Now after that, another thing which has been turning very positive in this negative market also is the Atmanirbhar thing, where we are getting two very fast and in a very strong pace getting self-reliant in defense. And HAL and Mazgaon Dock are the two stocks. Besides that, you can add BEL also in this list. HAL, if you see yesterday's corrective phase also, or where we were making new lows for Nifty or 52-week lows for Nifty, HAL was making new highs for itself. It was up more than 7-8% in yesterday's trading market. Even Mazgaon Dock was up. If you look at that, Mazgaon Dock recently in their 75i project delivered. I would request everyone to please keep your videos off, because that consumes a lot of bandwidth for us and it disturbs the session also. Yeah. So Mazgaon Dock has recently, in their 75I project, delivered 6 submarines to the Indian Navy, and now the new project 75PI is also there. So these all things has made defense players.
Miraj, you're not audible.
I'm audible.
Now it's okay. Now it's okay.
Yeah. Actually, wait, because everyone is switching on their videos, that consumes a lot of bandwidth.
So participants, please switch off your video. Don't switch on your video. And also stay in mute, please.
There is a way where you can, switch off videos for everyone. Not allow them to switch it on.
I'll just check if I can find it. So.
Yeah, I've done it. I've done it.
Okay.
Yeah. So what happens is these kind of companies give you a better SIP investment in these kind of volatile market. I'm not saying that defense stocks will not correct. They may correct and they may correct to also sharply as sharp as markets. But in these kind of stocks, recovery will always be very strong. Kshitija, keep the first screen only. Yes, this 25 stock screen only. That's it. Yeah. So that way we feel HAL and Mazgaon Dock are the 2 stocks where any correction is there, you can start SIP into these stocks. After that, even in this COVID times, what we saw that life insurance companies did face a lot of problems because of increased claims. So because of that, what happened is that they could not post those kind of growth which they used to post earlier. But now if we see, then a 15 to 18% of growth or 20% growth, they are having CAGR on their revenues every year. Now if some company which grows at around 15% CAGR, also in 5 years their revenues double. And penetration for insurance companies have also increased a lot. We have seen that we've seen that after this COVID, a lot of people are focusing on insurance. So that way we have taken 2 life insurance companies, HDFC Life and in SBI Life. Okay. Besides that, then we have focused on IT companies. We have seen that after COVID, cloud migration has become a lot. People are migrating towards cloud. Recently also, if we see, TCS had told that they had taken a cloud migration, and earlier the cloud revenue used to be around 5 to 6% for all these companies. Now it has gone beyond 10%, which is a considerable thing, that migrating companies from cloud has gone significantly up. So Infosys, LTI and Zensar Tech are the 3 companies which we like in the IT space. Now Clean Science and Asian Paints are 2. One is in the paint sector and one is in the pharma sector. So these 2 stocks, they are leaders in their individual spaces. Asian Paint has been clocking strong revenues even in this COVID times. So that is one thing which one can look at out for trading or SIP perspective. And now hotel space, leisure and travel surprisingly has taken a very strong bounce. If we see in hotel space has been very strong, and we have seen that room rates or have been tariffs have been on constant increase, and Indian hotels have been constantly adding new hotels. Recently they opened a very massive hotel, one of the biggest in Qatar. So that also shows, and they have a target of getting 300 rooms. So a very strong fundamentally balance sheet, almost debt free asset light model is what they are following. All of the new hotels they are entering into the partnership, so they are not buying it outright. So that is one thing which favors Indian hotel very well, and we are very bullish onto it. Then these two stocks, NAM India and NMDC, are safe and good dividend yield stocks, where NMDC has a dividend yield in more than 10%, while as NAM India has around 6 to 7% of dividend yield. And plus AMC stock, as we see for NAM India, has seen a very good correction. So at this particular point, it looks very strong. So that is one thing. Then in power, NTPC and Tata Power. NTPC is one of the best for your thermal powers, while as Tata Power is now venturing into solar also. So those two stocks also are looking very strong from here. In the chemical space or specialty chemical, China plus one policy has always been, in focus after the pandemic, and that has made Indian chemical stocks into a very sweet space. And Tata Chemical is one which we like, from here, where in the chemical space they have been one of the strongest, and they have a lot of products which are getting manufactured, or their raw materials are intaken from India itself. So that is also one thing which we have a benefit of. Then auto space was in an dire strait from when the pandemic started. But now if you see that after a particular spot, auto space is now becoming or recovering. And in that Mahindra and Mahindra is one stock where be it a passenger vehicle or tractor, since we are now seeing that agriculture is now getting back into focus. Agri prices are increasing, and that will increase the demand for tractors. And if we are expecting a very strong monsoon also this year, so tractor would be one of the best placed sector now. Also, Mahindra and Mahindra are making very strong changes in their portfolio in the passenger vehicle, where they have cars which has waiting for more than a year. So that is where we like Mahindra and Mahindra. EV space has also been very strong, and if you look at that, Sonacoms is the sole supplier to Tesla. So an EV growth story can be played through Sonacoms. On the QSR space or the FMCG space, what we are liking is Jubilant Food. This is a rising trend, in not only in the metros, but also in the tier 2, tier 3, tier 4 cities, where, ordering food from outside and eating at home. And Jubilant is the best placed into this category, where, and also, recent management changes will also act as a positive catalyst for Jubilant Food. Bharat Forge, it is an dual play. It will support auto also, defense also. So that is where it can be placed in both the baskets, where it can be with the defense also, where it supplies components to defense also, or supplies defense equipments also to the government, while as also gives supplies to autos also. So that way, that is one stock which one can look out. Real estate, we have seen that after a very long time saw a good U-turn and good demand. So that way we can see that even DLF can be looked out. And in the telecom space, the leader is Bharti Airtel, where one can look out at Bharti Airtel also. So these are the 25 stocks. Amitwa, is my voice very low or inaudible? Because many people are writing that.
No, I am. See, it is okay for me. It's totally okay for me. I think the people who are writing, they should come to a proper network, because to me, voice is absolutely clear.
Shatisha, to you, voice is clear?
Yes, sir, it is voice is audible.
So participants, you need to check your net connection also on your side, because many people are writing it is very clear, and few are writing it is not audible. So I am using my headset and headphone, and the mic is very near to me. So I guess it should be loud and clear to everyone. or else there should be some connectivity issue on your side. Otherwise, it should be clear. Yeah, okay. So these are the 25 stocks. So these are the 25 stocks where you can start your SIP, and also you can in these corrective markets, so for next 6 months, there would be a lot of turbulence going into the market. We have broken 52-week low also, and we have been correcting on a daily basis. There can be a sharp correction. What it is that the many people who would have joined in last 2 years have not seen a corrective phase or a bear phase at all. And last bear phase where markets entered was 2008. So anyone who would have joined after 2010 or 12 might have not seen a bear phase. They might have seen only that 1 month of blip which happened when the first lockdown is there. So that is one thing only where they might have seen that bear phase, or some kind of a correction where from 12,500 to 7,500 we dipped in a very straight manner. This kind of a bear phase where it's in slow steady correction was not seen. So we need to be very careful. There are instances previously also where from the high 50% has been retraced. That is, if in 2008 also, if we see, from 6,500 odd levels we retraced to 2,500, which is more than 50% of the retracement. Then in 2010-12 also, from 7,500 again we went to 12,500, which is almost around say more than 6,000 points of a rally. And when then we came back to 10,000, which is almost more than 50% retracement of the rally. Or from the top, if we see, it is more than 30-35%. So anywhere correction can be 30% from the top of the market, or 50% of the rally, or absolutely 50% of the index level. So our top was 18,600. Now from 18,600 also, if I consider 35 or 40%, then also it can be around 7 to 8,000, 6,000 to 7,000 points, somewhere from there, which itself bring us to 11,000. So there are possibilities that we may see somewhere around 13,000, 12,000, 11,000, or even 10,000 kind of levels in this kind of a bear phase or a corrective phase. So we need to be very light in our trading positions. Try and do selective stock SIPs. You generally you should have an 10 to 12 stock portfolio for SIP. We have given you 25 stocks, so you can choose any 10 stocks out of this and start an SIP, where every month you keep on investing into these stocks for next 6 months, so that this you can get an advantage of this correction. So that is where. And also there are many datas which you can look out before you start an investment in a stock, or even you trade in a stock. You look out for basic data, so that if by any chance, if also you are stuck up, you will have some kind of an exit when there is an up move or a rally. You need to maintain stop losses very strictly. So now I'll tell Kshitija to take you through all those technical datas, or even datas which are easily available on the NSE and BSE site. So that will help you to go through the entire your investment session in this kind of volatile market. So over to you, Kshitija.
Thank you, sir. Sir, am I audible?
Yes, you are clearly audible.
Okay. So good morning, everyone. So basically, first I will cover important technical data points. After me, Miraj sir will take off for the derivative data points. So let us start. So basically today basic topics we will cover, that NSE BSE website important data points, then ATP and pivot levels which help you in your trading, and moving average and crossovers. So first let us see quick NSE and BSE data points. So an NSE website you can track index data, stock data, which open high low of that, also 52-week high low data. So this is the basic data most of the people So for that you need to go to the NSE website. There is this market data tab. You click on that, then click on this indices tab, then this screen will open and you can see the basic data. So next important is how to check corporate announcement and corporate action on exchanges. So I am telling why it is important to track corporate announcement and corporate action. First, I will tell you corporate announcement. So what exactly corporate announcement is? So basically it is a notifications from company's board of trustee about recognition of event that materially impact shareholders. So if company got any order or any acquisition or merger or any fine if company get, then this kind of thing they need to inform on a stock exchange. Also corporate announcement includes corporate actions. So corporate actions is like dividend, merger and acquisition, stock split, bonus issue, like this. And also in corporate announcement one can track quarterly result update, then monthly business update, company's business update. So why we need to track this announcement? So like recent we can take an example. This week Bajaj Auto announced a buyback offer. So but the next day company deferred that buyback offer. So what happened after that announcement? Stock is goes down immediately around 6%. So we need to know ki what exactly reason behind the stock is going down or stock is going up. So that is the reason we need to check or track this corporate announcement or corporate action. So let us see how to check this corporate announcement and corporate action on BSE website. So first we'll see corporate action. So for corporate action, first you need to go to the bseindia.com. So if you want to check any company, so you need to type a security name in this search bar. So after that, this page will open. Slightly scroll down. There is this two option is there: corporate announcement and corporate action. If you click on this corporate action tab, this page will open. So see here, you can see the history of all the corporate action which company announced. So dividend is there, right issue is also there. So in the dividend, in detail, what exactly rupees they announced that dividend, what is the ex date, what is the record date of that announcement. So everything you can see in this easily on the BSC website. So same for the corporate announcement. So for corporate announcement, you have to click on this corporate announcement tab. So this page will open. So all the notification, you can see this, which company announced. In this notification, you can easily track quarterly result update and monthly business update also. So if you want to check uh, compile, or we can say which company result is there, so directly again you have to go to the bseindia.com. Then there is a corporate tab is there. So in that corporate filing is there. So you can see this page. This is a result calendar. Why I'm telling you this result calendar or tracking the result is important? Because when the result season is there, quarterly result season is there, that time if the stock result is there, then the 1 or 2 day before the result date, stock is more volatile. So if you know the exact result date of that company, then you can take a trading position accordingly. So this is the reason we need to know result also. And apart from the result, you can track the corporate announcement and corporate action, which impact mostly the stock movement. So these are the important points of the corporate announcement and corporate action. So now let us see the basic fundamental data points which can easily access in the BSc data screener. So on the BSc website, you can check a basic fundamental data that like a market cap. So market cap is current market price into outstanding share. So basically is the total value of a company's share. Then EPS, so which basically profit per outstanding share. Then you can see P, using P you basically using for the valuation purpose. Also price to book value and return on equity. So these are the important points which can easily see on the BSc. For that again you need to go to the bscindia.com, type a search bar that security name. This page will open. So here you can see the EPS of that company, PE of that company, price to book value, return on equity. Like this data is available on BSc. And if you want to see the detailed fundamental data points of any particular company, you can go to the screener.in website also. So in screener.in, you can check the company information like last year sales, last 5 years sales, or like is the company is debt free or not. Like this information you can available on that website. So now let us move to the important part of this presentation, that the important data points which we need to check before the trading. The first is a pivot level and ADP level. So first is a pivot level. So it is basically pivot level is used to determine the first overall trend of that market over the different time frame. It is a simple average of that high, low and closing price of the previous trading day. So next is a ADP. ADP is a based on the both volume and price, which gives trader idea of the trend and value of that security. Now next 2 point is the open and low and open and high, and also crossing previous day high low. So if stock is has a made open and low same and crossing previous day high, then chances of stock showing positive momentum is increases. Same for the opposite side, like if the high and open is same, and if the stock is breaches previous day low, then chances of stock going down is higher. So with this data points like open low, previous day high low, you can take the help of pivot, resistance and support levels also. So all these data points will be helpful for your trading. So now let us see how to calculate this ATP and pivot levels. So for the ATP levels, you need to know the historical data. So for that, you need to go to the same for the historical data NSE website. Why I'm telling you NSE and BSE website? Because easily you can access this NSE and BSE website. So you have to type a security name. There is a historical data option is there. So if you click on that historical data and select a time frame and download this Excel or data, so you can easily have that Excel to calculate the ADP. So this is the formula for the ADP. So total turnover or total value divided by total volume. So I will tell you in the Excel. I have already downloaded the Excel. So if you want to calculate ATP of 21 days, so you need to take a sum or total value of 21 days divided by total volume. So you will get the ATP of 21 days. So next is ATP of 34 days. You can same with the help of the formula, you can calculate ATP of 34 days. So
Kshitija, sorry to interrupt. Just tell them which volume or value you have taken and divided by what. So just click on the formula, so it will show what you have done.
Okay.
Just press F2 or there. Here, yeah, press F2.
Yes.
So
it is visible, sir?
Yeah, visible now.
Okay. So see, for the 21.
No, you're not audible, Kshitija. Kshitija? Kshitija, you're not audible. Okay, I guess there is some connectivity issue over there. I'll just take you through what she was telling. See, for 21 days, what is the value it got traded and what was the total volume? So basically, when you take an average for your trades, say you have traded 3 times in a day. Okay, our connection is gone. So when you trade for 3 times a day, okay, what you take is the total value of those 3 trades and you divide by the quantity to get your average price. It's basically as simple as that. We are taking the average for the market. If whatever volume was there in the market, so that is basically the amount of quantity into the price what they traded. So that entire volume for the day divided by the quantity got traded. That will be the average for the market. So that way average for 8 days, what is the average of that 8 days? So that was there basically on her Excel sheet. So that you can do for 21 days also, and that you can do it for even 31 days or whatever you want. Just give me a moment for her to reconnect also.
Sir, am I audible now?
Yes, 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 it is audible.
Yeah, you are audible.
One second. Okay, my screen is visible.
Yes, your screen is visible. I've already explained that. You just take to the Excel sheet once.
Okay, fine, sir. Okay, Excel is visible, na, sir?
Yeah, it is visible. Go on.
So like ATP of 21 and 34 days, we can calculate like this. So this is the basically ATP calculation. So you can calculate any time frame of the ATP like 21 days, 34 days, 55 days. So now let us see the how to calculate pivot level and resistance level. So here is the formula. The pivot level formula is the price of high plus price of low plus price.
Kshitij, sorry, you need to do it into the presentation mode.
Okay. Now it is proper.
Yeah, now it is fine.
Okay. So if anyone want to this formula, you can take a screenshot of this slide. I will wait for 2 seconds. Okay. So this is the formula. You can feed or you can take it on the Excel and you can easily calculate. So now let us see how to calculate pivot levels. So pivot is price of high plus price of low plus price of close divided by 3. And so with the help of pivot level, you can calculate S1 and R1. So 2 into pivot minus price of high and plus price of high. So same for the R1, 2 into pivot minus price of low plus price of low. And now with the help of S1, R1, you can calculate S2 and R2. And with the help of S2 and R2, you can calculate S3 and R3. So if you don't want to do this calculation, you can refer our morning report. So in our morning report, all this data is there. So I will show you. See, this is a 17 June morning report. So you will go down. Last 2 pages is the pivot level and ADP calculation or ADP data points is there in our report. So just one thing is that this stock or this 112 stock is fixed, like that stock domain or stock universe is fixed. Just everyday data is updated. So here you can see the support level sub S3, S2, S1, pivot and R1, R2 and R3. So same like pivot levels, ATP data is also there with simple moving average. You can take help of this ATP and pivot and you can easily or you can take help while doing the trading. So next move to the moving average and crossover. Last part is this. So moving average is basically we can use 50-day, 100-day and 200-day. So simple moving average is a arithmetic mean and exponential moving average is a weighted average, which gives a greater importance to the price of the stock. So mostly people track 15 days, 100-day and 200-day moving averages. So next is a crossover. So what is a crossover exactly? So crossover is either one moving average cuts other moving average up or downside. So generally there is a death and golden crossover moving average is there. So golden crossover is when 50 DMA crosses 200 DMA from below, that is a golden crossover. And death crossover is exactly opposite. Now we will see what exactly this crossover is in the chart. So this is a Nifty chart. This green line is a 50 DMA moving average and this blue line is a 200-day moving average. In recent days, that 200 DMA cuts the 15 DMA. So after that, you can see how Nifty goes down sharply. So this is the death crossover. So once this 200 DMA cuts the 15 DMA, it will show the negative momentum of that stock or negative momentum of that indices. So this is the important technical data points which we just see that ATP pivot and moving average and crossover. So this with this help of this moving average then ATP pivot levels, you can take a trading position and which will help you in your trading. So that's it from my end. Thank you everyone. Now I will hand over to Miraj sir. Over to you, sir.
Yeah, thank you, Kshitija, for all these things. Now, few things which I want to add in what she was going through is that, if you saw that, there was a dead crossover, or where, 50-day moving average did cut Nifty from the top, and we have seen that, markets were in this corrective phase also. And if we look that, overall, what we have seen in this market is that there has been a lot of volatility. It is not that, correction is one way. It is not a very steep fall which we used to have previously in this rally, where 15 days of strong correction on one side, where markets used to go down by 7, 8, 10%, and then retrace back and start making new highs. That has not been the case in this correction. From 18,600 high, what we have seen is that, slowly and steadily markets have grinded to lower levels. Though, when the correction will get completed, when there would be a very sharp one-way decline. But before that, time-wise correction is what we have not seen from last many years, and that is what we call as a bear market. Now, in this kind of a bear market, what should one do is of the most important thing. Now, that is where, how do we navigate through this bear market? Most of you would be having that in mind, that, sir, we need to know how do we navigate our positions in this bear market. So, Kshitija, is my screen visible?
Yes, sir.
And I'm audible clearly?
Yes, yes.
Yeah. So these kind of, markets, we need to navigate it a little bit more, what we say, smartly, or, tactically, where we cannot, leave our positions or trade in and trade out frequently from our positions. If that is done, then there are chances that, so then, Kshitija, I am audible?
Yes, yes.
Yeah. There are chances that, if we frequently trade in and trade out of the stock, then there are chances that we may, unnecessarily move our positions on both the sides, and ultimately then we would feel that, if we would have just stayed there and hedged our positions or moved our positions less frequently, it would have been much profitable. And derivative is one thing which, would enable you to do that. But one caveat I will put here: you need to be very disciplined when you are trading derivatives, because at the time of navigating, your objective would be one, but when your objective is met, the cutting of the positions also should be ruthless. It should not be that, it should not be that, you start cutting your positions only on the profitable side and not on the positions which are in the loss. There would be always, when you would be hedging one position in profit and one position in loss, that is the actual motive of hedge. So both positions needs to be cut simultaneously. Now let's start with some basic things of derivatives. I would not, start with directly strategies or everything, because I know few participants would want to start it from the basic concepts of derivative and then move on to the strategies part. So overall, what are options? They are nothing but, they are stocks which give you an entitle to buy the equity or buy the actual shares. So basically, options are nothing but contracts. Derivative itself does not have its own value. It derives its value from something. So basically, if you see an option, once you buy an option, it will give you a right to either buy the stock or either sell that stock at a particular point. So that is the reason what we say is that, derivative is an option contract which will give you a right or entitle you with the right to either own the company's equity shares or sell the company's equity shares. So basically, when you are buying a call option, that would give you a right to buy those particular shares, one lot, which can be, for example, say 100 shares. Let's consider that, here the lot would be 100 shares only. The lot is defined separately for separate stocks, but just for understanding, we'll keep that, if you buy a call, it gives you a right to buy 100 shares. And if you buy a put, it will give you a right to sell those 100 shares. So you have got these two kinds of right. Now just let's keep this into a practical thing. Say if you are holding a stock, okay, and then you might feel that, it has already, the correction was there, now that pullback has happened. Now I want to lock this price for this month. What you can do is, a put will give you a right to sell those shares. So you just buy a put and you'll get a right at a particular price to sell that shares. So basically you have hedged your position. Okay, if the stock falls, you can still sell your shares at higher rate. So that will lock your losses. Okay, and similarly, if the stock has fallen too sharply and you feel that I need to average it, but I cannot buy the stock again in future because I don't have that much of margin. This is one of the frequent problems which we all face, that the client doesn't have that much of margins to average, or his buying power has almost gone zero, or his buying power is reduced. So in that case, what you can do is you can buy a call option and you get a right to buy those particular shares. So once the market moves up, the call price also moves up, and it gives you an option to cash in that recovery or a bounce. So these way simple things can be done in these kind of volatile market, or you can use these basic option strategies of buying a call and buying a put to just navigate through this volatility and reduce the impact of that on your overall portfolio, or also for that matter of fact, your trading positions. Now, writing is a little bit of a complex process, because since there is a buyer, there will always be a seller. So writing is nothing but it gives you an opposite right, say or an opposite obligation. Say for example, if you are a buyer of a call option, it gives you a right to buy that particular shares. Okay, and if I am the seller of that call option to you, so whenever you want to buy that shares, I am obligated to sell it to you at that particular point of time and at that particular price which was agreed earlier. Now say for example, you are a buyer of a put option, so that gives you a right to sell that particular shares at a particular price. If I am the seller of that put option to you, whenever you say that I want to sell my shares at that particular price, I am obligated to buy it. Okay, so I don't have a choice. You will always have a choice if you are a buyer of an option. The seller of option will not have a choice. He is obligated to complete his contract. Okay, now standardization is there in the options market, and why it is important is that it clears many questions in the mind of the buyers and the sellers before they execute it. Say for example, the option would be fixed if it is an call option or a put option. Option style is also there, but to make it simple for our listeners, there are two type of options: American option and European option. For Indian markets, equity market, it is all European option. That is, you can exercise your right on the expiry day only, not in between. Whereas American option gives you that right to exercise it anytime in between. So if you can say, it is a simple difference, a medical insurance, whenever you take a medical insurance, from that day till the policy expires, you can claim your medical insurance anywhere if you fall ill. Well, if you take a term plan life insurance, you cannot claim in between that, okay, I am not dead, but I want my payment of life insurance. On the expiry day, that is on the event day only, you will get your money. That is in the event of the person expiring only, that life insurance pays. So these are two type of insurance. So we have European only, so we don't need to get confused. You can exercise your right only at the last Thursday of the month or of the week, depending upon what you have taken. The underlying security is fixed. So there would be a security, say for example, if you're buying Reliance call option, Reliance will be the underlying security. Exercise price or strike price is there. Expiry date is there. And also, you will get the overall settlement criteria. Will it be cash settled, or it can be stock settled also. Underlying security is nothing but the stock which you would be buying or selling. If you are buying an option, or you're selling an option, or you're buying a future. Now, let's just go through the specifics, what we have understood. The contract of a buy option, say if you're buying a call option, it gives you a right to buy 100 shares of XYZ per shares at a 60 rupees per share, which will be your strike price at the last Thursday of the month. Since you are buying a stock option, it will be last Thursday. If you are buying index option, that is Bank Nifty and Nifty, it will be last Thursday of the week, or whichever expiry you choose. Similarly, a long put option or a long put option gives you a right to sell that particular shares, say 100 shares at 75 rupees, for example, here would be a strike price, whichever strike price you choose, at the last Thursday or the expiry of the month. Since you were the buyer, I was the seller of that call option, so I am obligated to sell that particular amount of shares, 100 shares in terms of call, at 60 rupees to you if you exercise your right. Also, if I was the put seller, so that means I am obligated to buy those 100 shares at 75 rupees from you at the last Thursday of the expiry. So this is pretty clear. It is very simple what we have kept here, so that the main objective is not negated. Then you can choose different strike prices if you want, and those strike prices can be classified as in the money, out of the money, or at the money, depending on what you choose. Okay, that is also very simple to understand. Wherever you find that when you are entering into the contract, you are getting some additional benefit, that means that is an in the money strike. Say for example, if currently Reliance is quoting at 2000, and if I get a right to buy Reliance at 1800, that means I'm buying at a 200 rupee profit. So that means that strike price is in the money for the call option. Say for example, if I'm getting I'm buying a put option to sell Reliance at 2200, that means I'm getting 200 more than the current market price. That means 2200 put is in the money, and it will be completely opposite for out of the money. So this is where, if you can just a simple mathematical formula is there, where, a call is considered in the money when the exercise price or the strike price is less than the current underlying price. And for call, it is considered out of the money when the strike price is greater than the current underlying price. Similar for puts, in the money is when the strike price or exercise price is greater than the current underlying stock price, and out of the money when strike price is less than the current underlying price. So if you want, we will share the PPT, but if you want, you can just click a picture. I'll hold on for 2 seconds. This is for the call, and this is for the put. Now, an option, one needs to be very careful because it is a melting option. With every day, the time value will keep on decreasing, because there are two values in an option premium: intrinsic value and time value. Generally, your in the money options will always have intrinsic value, but your out of the money or at the money options will only have time value. So as the time passes, you will see the option value keeps on decreasing. And that is the reason, you cannot hold your call option or a put option buy positions for eternity in hope that, the prices will come up. You need to be very specific that, in next 10 days or 15 days, I feel that, the momentum will be there in the stock on the upside or the downside, is where you start buying your call options or put options. Now we come to the important part, is that, how you can hedge your positions in these kind of markets. One which I have clearly outlined in the initial part of the presentation is that whenever you are feeling that, markets from here are still more corrective, or the stock you are holding is still more corrective and can go down, you can simply buy an out of the money put option. So an out of the money put option, whenever the stock reduces, will increase in value, and that will offset some of your losses, and it will protect you below the strike price. So you would be completely hedged if it is 1:1. That means you are holding one lot of a particular share and you buy a put option of that share. So for example, you are holding Reliance at 2000, one lot, and you decide that, below 1900, I don't want to take risk. So you buy 1900 put option, one lot. So till 1900, you might be partially offset, but below 1900, the entire risk is offset because you have a right to sell that share at 1900 only, since you have bought a put option. So that means below 1900, your losses will not increase. So that way you can navigate. Just give me a second. That way you can navigate in these kind of volatile markets also. Similarly, at the lower end, if you want to average your positions, but you don't want to take so much of risk, what you can do is, but still remember again, call options or put options, they are melting securities. So just don't average because the stock has fallen 5%. Average because the stock has sorry, average because the stock has stopped or halted its fall and now is showing some momentum upward. That is when only you can, average through options. So when you see that your stock is showing some upward momentum, you can buy a call option, and when you feel that, the momentum or the pullback is completed, but it is still not got at my average price, you book some profit in your call options and then again wait. Okay, so that would be one way to do it with options. The another way to do is, sometimes, in these kind of volatile markets, the premiums for options, both call and put, are very high. So what you can do is you can enter into a bull call spread if you want to buy a call, but the premium is very high. You buy a call, and then at the point which you feel that the pullback may get complete, or at your average price, you sell the call also. Okay, so that means your net cost for that strategy will come down. Say, if you take an example over here, you buy 14,500 call at 50 rupees and you sell 14,700 call for 20 rupees. These are the two strike prices. Your net cost would be that you would be paying 50 rupees and you will be getting 20 rupees. That means your cost will only become 30 rupees. So that is how, your cost can be lowered. Okay, and your break even would be once you recover that 30 rupees. So that is 14530, and profit will be 170, because there is 200 rupees of up move and 30 rupees was your cost. So this will be the payoff for you, where your loss is capped at 30 rupees and your reward is also capped at 170 rupees. So instead of averaging with only pure buy call position, if you still feel that, stock has fallen by 5%, but it is not showing that much of momentum, but I don't know when the momentum will come, it might be a gap up and then I might miss it, then you can enter a bull call spread, because bull call spread takes out a little bit of a time value decay, because in the sell option, the time value decay will run in your favor, while as in buy option, it will run against you. So the net effect is little bit reduced than a pure buy call. So this can be a second option also. Similarly, you can do a put spread also, where you say, for example, buy 14,400 put option at 50 rupees and you sell 14,200 put option at 25 rupees. You need to be very careful in selecting the price, strike prices. Whenever you buy a call spread or buy a put spread, net on net, you will have to pay something. You cannot receive something. It cannot be that you buy 14,200 strike at 25 and then you sell 14,400 put at 50 and you receive 25. So that means you have selected you have bought and sold wrong strikes. Okay, so similar the break evens will be, and similar will be the payoff, where 25 is the maximum loss what you can attain and 175 would be the maximum profit. So these are the kind of strategies, in this kind of an volatile market will be very helpful. where since we all are at a particular point stuck up into the markets where we are not able to push in additional money into it, or we are always with limited resources. So to use our resources to maximum, this is what you can do. And always choose your objective very wisely. You need to know that you need to remain into this position for how many days. You need to enter both the positions together if you are entering a spread, and you need to exit also both of them together, be it in profit or be it in loss. Now few trading rules, I'll not spend much time over here, but still quickly I'll take you through them. Keeping 2 days of low and high as stop losses for your buy and sell position. This is very important if you are a trader. If 2 days high or low is breached, that means what Kshitija had showed earlier, the pivot levels also would have been breached. So those pivot levels also can be kept as stop losses. If you are into a buy position, then your S1, S2 will be your critical stop losses, and your R1, R2 will be your targets. So that also you can make use through our technical report, which is sent on a daily basis. All the 25 stocks which I had listed there, we are updating the list. So those also will come into that ATP and pivot thing very soon. Most of them are there. Few of them might be excluded, but that also will come soon into it in next 2 to 3 trading sessions. So that can be utilized on a daily basis. Don't try to trade in the opening ticks for both. If there is a gap down also, wait for 10-15 minutes for the markets to settle down, and then you might get a better price to exit. And even for buying also, wait for first 10-15 minutes of a frenetic move to happen, and then enter into that stock. That will give you a better and a clearer picture to enter into it. Don't average your holding positions too frequently. Wait for the entire correction to complete, it to consolidate, and show some signs of stabilization and up move, then average. So those are the few things which you need to be very aware of. And one thing which now everyone would be agreeing, because we are into a bear phase, but we have been saying this from ages, that never ever trade into junk stocks. If the stock is fundamentally not good or not doing, say I'll give an example. Tata Group, everyone says it's one of the best groups in terms of ethics, but TTML is a Tata Group stock. It is not necessary that every company will have same kind of fundamentals. TTML at around 230, 240 was the high, and then it trades into lower circuits, and now it is at around 130. Currently also 130 is an extremely high valuation for a company which is making losses for last 8 to 10 years, and losses increases every year. There is no point for us to risk our money into loss making companies, be it the new listing that is such as Zomato, or PB Infotech, that is Policy Bazaar, Nykaa. What we have seen that these are loss making companies, and ultimately markets will punish them. So never ever trade into companies which are making loss or fundamentally weak. So this is what we wanted to give you. Now a few notable email addresses and contact numbers are there on your screen right now. Mr. Shiv Mishra, our national head, his email ID is given there. West is taken care by Mr. Nilesh Parab. His contact detail and email IDs are there. North is taken care by Mr. Mrityunjay Kumar. So his contact details are there. And East is taken care by Mr. Sandeep Dubey. So their contact details are there. Even if you want a PPT for both, for both of these presentations, many were requesting their email IDs. I had earlier also told in the chat session that you can send that to your regional manager or dealer or ASM, whoever it is, where you are in touch with our contact points of IDBI. You can give your email IDs there. They will send it to us, and in a day or two, we will email you the presentation. At max by Tuesday, most of you who would have requested your presentations will get your presentations to our email ID. And if not, for South region also, Mr. Vijay is there. I'm sorry I had missed that in this presentation, but if not, I'll put my email ID also. You can mail it to me also for presentation. This is specifically for them who would not get their presentation in next 2 days. So in the chat, I have given my email ID also. Now, Amita will open the floor for Q&A. Anyone has
Yes,
any
yes.
questions, please raise your hands so that we
Yes,
can
yes.
ask you to unmute and ask the questions.
So please raise your hands. We'll take your name and you can put your questions through. So we already have a hand, Raj, Mr. Asit Roy.
Yeah, Asit Roy, please, you can unmute and ask your question.
Mr. Asit Roy.
Yeah, Mr. Asit Roy, you would now be able to unmute yourself. Besides that, anyone has a question, can please raise your hand so we'll move ahead in the queue.
Mr. Anil. Mr. Anil. Mr. Anil, please unmute yourself. And
Yeah. Good morning.
Good morning, sir.
Sir, I wanted to ask about Aditya Birla Fashion. What is your view?
So stock specific queries, we would not take it here. What you can do is, I have shared my email address also. And plus, you are connected with which branch, if I can know that?
Nariman Point.
Nariman Point. So I guess the RM or someone would be there. What you can do is you can call him on Monday morning or whenever you are comfortable and tell them they will connect with me and we'll take all the stock specific queries there, because it will be much better, if you speak one-on-one on the stock side, because it is not only one stock.
So Monday, any specific time or any time?
No, anytime after 10:30 is what you can call.
Nice. All right. Thank you, sir. Thank you.
So participants, we will not take stock specific queries. Any query regarding the presentation. Stock specific query is, as I have told, that you can connect with your branch and then let them connect with me also, and I am willing to help you on n number of stocks which you have.
Sir, there is one query on the chat box.
Can you show us how to buy a call on trading site? On the trading side, Mr. Rohit Doshi, you have asked that question that, on trading site, how to buy a call. You can get a demo. You can get a demo from our branch. They will show you the entire trading platform, what we have with IDBI, on also the mobile platform, because currently here I would not be having those accesses with me on my the laptop. That would be done by the trading team or the account opening team. So you can get in contact with them. Mr. DK Goel, yeah, you can unmute and ask your question.
Yeah, my question is not related to the today's presentation. It is a general question. I understand there is a new desktop application has come. I'm finding difficulty in getting through the desktop application. Though I had given a mail to the customer care, but somehow I'm not getting response. Is it true that there is a new software on the desktop where I can do some trading or do some investment?
So a desktop version got updated recently. Through which branch do you trade?
I am at the main branch. My trading account is with the IDBI Devnar branch, but okay. I am connected directly with the IDBI Capital.
So who takes care of your trades?
I do not know, because I don't normally
What you can do is, sir, you can just drop in your coordinates through my email ID, and I'll look into it and I'll tell someone to connect with you.
Because what I am finding that sometime, let's say if you dial to the customer care, we do not get a response. I given a mail also, I am finding it difficult to download, but through some difficulty, somehow I have downloaded that new TCS software, desktop software, but somehow I am not able to operate that.
So you can just drop your coordinate on my email ID.
Where is your email ID where I can get it? Now, can you put it here so I can
I
understand?
have put it on the chat.
Okay, I will see that.
It is Miraj, Miraj, Miraj.Vora, Vora.
Yeah, because and second thing, long before it was said that there are some difficulties with respect to the portfolio management. So let's say we first of all, I must congratulate you have got a good portfolio recording, and this portfolio is extremely helpful for us to put our ITR input. But there are certain difficulties, certain options such as the buyback or OFS. All these things are not having an input, and you do manually. There is no option. Let's say to indicate what kind of the action is there. It is only buy and sell. Only two options are there. This is last 2 years I am pursuing for it, but somehow I am not finding the proactive action in this regard.
You just send me through an email, so I'll look into it, and whatever the concerned person would be there, I'll make sure that he connects with you.
I have written to every part of it. Let's say I will also give it to your email ID, what you are telling, but I had given to everybody whatever names you are giving on the screen. But somehow relief is not, proactive relief is not coming. Everybody is giving something or other, or sometimes you do get a very usual response. Okay, we have seen it, we have forwarded it, and that response you are now this cannot be done. You do it manually. So that kind of the response is coming. So it may be a complaint, but this is what we are finding it difficult. Second thing here also regarding your presentation, things are okay, but audibility was definitely poor. So because you do quite frequently, I feel that maybe my system is okay. Because I do it at other system also. So my system is working, but your audio is not very loud and voice is cracking. This kind of a thing I am not doing when I am chatting with others.
Okay, we'll look into it definitely, sir.
I do not know. I could listen the voice because again it is cracking. Okay, it's okay.
I said that we'll look into it. If there is these kind of issues, we'll definitely look into it, how it can be more, more audible to everyone. Because few of them gave a feedback that it is audible, few gave it is not audible. So we'll definitely look into it.
Your feedback was coming from your own people, Ishita or somebody. So they definitely will be able to listen. But to the audience who are connected, I think more than 200. It should be from them rather than from your own people.
No. We are all at separate locations. It is not that we are sitting in one location. Everyone is today, either in the branch or at home. So it is all separately located and connected. But we'll definitely look into it, sir. Yeah.
Okay, thank you.
Anupam Singh, if you can unmute and ask your question.
Am I audible, sir?
Yes, you are audible.
Okay, good morning to everyone and to you as well, sir. So basically, in this bearish market, I can understand that the shares that the market is going under correction. So, sir, how do you help me to analyze the stocks which has gone under merger in the current market scenario, like HDFC Bank, like LTI, along with Mindtree? So how do I analyze that the stocks will have an upward movement? Because every one single day, every other day, the market is showing an upward movement and then it is going bearish. So under those circumstances, how do I analyze and secure my money, secure my stocks under these companies? So if you can help me to understand the scenario and how to analyze these stocks.
See, in these kind of bear scenarios, when mergers and acquisitions are announced, one simple thumb rule is what we keep is that, the company which will exist after the merger would be the better company to be taken in, because you will at least have a much clearer picture that, that company will be there, and how his fundamentals will get affected after merger. Say, for example, for HDFC Bank, HDFC Limited will get merged into HDFC Bank, and then HDFC Bank will be the sole entity, right? So you need to understand how the merging of limited into bank will affect HDFC Bank's balance sheet. Will they have to, make higher provisions? Will that help them to grow in their revenues or not? And that is one thing of it. But the second thing what you are talking is that, one day the stock price goes up, the second day, sorry, the second day price corrects. So that kind of volatility will always be there. But in current scenario, we always advise that, you don't put everything on one go. You have to have an horizon of 6 months or at least 4 months of investments, where, in the next 4 months I have to invest this, and I have to invest it slowly. But say, for example, if you are already fully invested, and then how you take care of it. So for that is what we know we had, that's the reason we had splitted this into two parts. First part where Kshitija took would give you a way to invest for next 4 months, 5 months or 6 months. The second derivative part which I took is that, if you're already invested, you can use options or derivatives with simple strategies, not complex one like a buy call or a buy put, to manage your positions. If you feel that, the correction will still go on, at least buy some puts to protect, not 100%. Say if you have 1,000 shares of a particular stock, you at least buy puts worth 500 or 600, so that some protection is there, not entire, so that, at least in downtrend your losses will be limited, which will give you an opportunity to enter into the stock or average it in the cash market also at a particular point. So this is how you need to manage, because yes, I agree, most of us have been, in this market post 2014-15 only. Most of us, very few people would be there who would have seen 2008 correction, because it was a 14-year back where the correction had happened. Very few investors and major investor base which has expanded after 2017. So we have never seen a bear phase, or what a bear phase looks like, or how it feels. On technicals, you would have seen that, from 12,500 Nifty came down, but that is a separate aspect. Emotionally, how draining the bear market is not what we have experienced. So that is the reason we wanted to conduct such seminars.
Okay, sir. Thank you.
Yes, we have someone with OnePlus Nord. Kindly unmute yourself and ask a question.
OnePlus Nord 2.5. You have just raised your hand.
Yeah. Just wanted to check with you, sir. For long term, if we continue investing in Group A, there should not be any problem, right?
By long term, what is your definition? How many years would you define as long term?
5 years.
For 5 years, it is not an issue. But if you define long term as 1 or 2 years, there can be an issue.
Okay. Okay, sir.
Yeah.
And
Because
second thing,
next till Diwali, we still feel that, markets would be in these kind of corrective phases. So that would be the best time to accumulate it, and then it will take another 2 to 3 years for to actually get in some meaningful returns. Okay. Yeah, go ahead. You had a second question also, follow-up question.
Yeah, and means still market will go down, and whether recession is for sure now. Recession going looking at the US
sir,
economy.
For sure in this market there is nothing, but we with our analysis we feel that the probability of correction can be much stronger than it not happening.
And still, do you feel that it's a market is overvalued?
Yes, it is overvalued.
Okay, sir. Okay, thank you very much.
So any other participants who have some questions can please raise your hands. And Amitwa, if there are no more, yes, there is Hemant Palanje. Please unmute and ask a question.
Mr. Hemant,
Mr.
kindly unmute yourself. Mr. Hemant.
Hello, good afternoon, sir.
Yeah, good afternoon.
Sir, I want to know range of bottom of market, current market.
Sir, for range of bottom of market, it can be somewhere from 13,000 to 10,000. See, bottoms are never easy to.
And sir, what is time period?
See, these kind of things, you cannot say surety, but till Diwali, we feel that markets are looking weak. It can bottom out somewhere between 12,000, 10,000, or somewhere around that 11,000. We are not sure, but we are sure that, till Diwali, the trend will be weak.
Sir, currently, may I invest or wait for some time?
You can start investing if you have not already invested at all, or you have you have some cash in hand, but invest where you can invest from now till Diwali in small parts. So that is the reason our first slide was the stocks where you can invest in SIP manner. Every month you need to invest little into this market. So you have 6 months, 6 to 7 months where markets will be in corrective phase, and there is where you can slowly start investing.
And sir, one or two stocks to invest majorly.
I have given the list of 25 stocks as the first slide of my presentation. So you can pick and choose any stocks you want from those 25 stocks.
Okay. Thanks, sir. Thank you.
Oppo
Okay,
Reno 10.
yeah, Oppo Reno 10.
Hello, am I audible?
Yes,
Yeah,
yes.
you audible.
Yeah, hi, sir. Actually, my question is regarding sector specific. The finance sector, wherever the PSUs, say Indian Railway Finance Company, Power Finance Corporation, and these PSUs, which are sort of hand in hand working corporations with sectors related to government. How do you see them? I mean, most of them are trading below their IPO prices, though they give good returns in form of dividends. And I regularly go through their reports, financial reports, and they are constantly increasing, showing increase in their profit. But still, market doesn't recognize them. Is there anything specific wrong going on with these? Actually, I have good holding in them. So should I be selling them or anything specific regarding this sector?
See, in the finance sector, it is nothing that which is going wrong into the names which you have mentioned, and they give good dividend yield, plus they are constantly getting government orders also. So in that case, it is not that it is one thing where stock prices you are saying is not getting rewarded, which is true, but that would be the case for many stocks. If you look that same thing happened in the defense space also. From last 2-3 years, defense space was not given that of recognition, despite of it making most of the progress with the government. Now suddenly it has come into the flavor, and where it is getting stock price recognition also. So that will come. That is the reason we say that you need to give time for your investments to grow. It will not always work in linear with the markets, but slowly and steadily at the end, after 3, 4, 5 years, valuations will definitely catch up. In these kind of scenarios, when you will see that these stocks are trading at lower valuations and are at attractive valuations, plus with good businesses with government, where lesser chances of any NPS happening, then definitely in a corrective market they will gain interest. So everywhere there is a cycle which we need to wait out for.
Right. All right. Thanks a lot. And one more question. Actually, I have a portfolio of about 30 stocks, close to 30. And I feel I just went through certain tools to check the diversification in my portfolio. It went like about 55% in finance and 20 in IT and rest others. So do you think I should try to, um, uh, change the weightage of this whole portfolio? And what's the best way to balance out your portfolio? How to know the total sectors and where should I look in more? Any specific tool or something that can help me out in this?
So one way which we can help you out is that, in the chat box, I've put an email ID, retail.research@idbicapital.com. Okay, you can send your portfolio. So in that we will look out, the stocks which you should hold on, or stocks which you can exit. And plus, if you want, specific weightages to specific sectors, say you say that I want to keep my portfolio financial heavy, or I want a proper diversification with, appropriate weightages to all sectors. Just mention that in the email. So I'll personally go through your portfolio and change the weightages and send it back to you.
Sure, sure. Retail.research@idbi.
Yes, that is there in the chat box.
Okay, all right.
Sir,
Thanks a lot.
what should be the model portfolio like in the current scenario when the rates have come down? What can be the model portfolio that one can be, getting into it now? Right level?
Sir, there is nothing as an fixed model portfolio for everyone, but the portfolio should be in such a way that it has to be in at least 4 to 5 sectors and at least 10 to 15 stocks. So only if you recollect, first slide where I had given 25 stocks, in the end I had mentioned that your portfolio should have at least 10 to 15 stocks. And if you see, there we have banks, we have defense, we have pharma, we have paints, we have leader in hotels, QSR in food, then we have NMDC and all high dividend yield stocks also. We have telecom also. We have most of the sectors are covered. So in that you can pick up overall a 10 or 15 stocks to make your portfolio with equal balance weights or almost similar weights for everyone. A possibility that banking may have a little higher, defense may have a little higher, your telecom might have lower. That is possible, but try and keep in at least 5 to 6 sectors.
Can we get that? Can we get that list or slide, sir?
I'll share the entire presentation. What I'll do is, Kshitija, if you can just put that first slide over here, I'll stop my screen. Yeah, just do the presentation mode, no, Kshitija, please.
So it is visible?
Yeah, it is visible. Just make it in the presentation mode.
Yes.
Okay, thank you.
Yeah, so you can just take a photo of this if you want.
Right.
Sir, just one, your IDBI promoter LIC, at what price we should buy?
Sir, for LIC, we would not be making any comment because we are, it is the parent for us, and it would not be right to make any comment on it on compliance grounds.
And sir, how about delivery?
No, newer IPOs, we are very strictly, avoiding it. It is not a profit-making company, though, before IPO, they might have shown something rosy in their books, but we still feel that, the recent listings are worth avoiding than worth taking any risk onto it. Okay. Even the already listed companies which are trading lower, we still feel it should be avoided.
Okay.
We opened account very recently. So whether any RM is assigned to like account, retail account?
Sir, I will just take a few people are in the queue and then I'll take your question.
Okay.
Dinesh Kumar, you can just unmute and ask a question, please, sir.
Hello, can you hear me?
Yeah, I can.
Yeah, thank you for taking my call. So my question is regarding your previous Diwali recommendation, Valiant Organics and SBI card. So what is the position that we have to do now? Because I don't see those two stocks also not coming as part of your recommendation here.
For here, we did not want to repeat the same recommendations because if you see, most of the Diwali stocks would not be featuring in this, because we know already many of you would be holding it, and giving the same stocks would not make any and it would not have solved the purpose. But for the two stocks, I'll still say that Valiant Organics is into specialty chemical. We have picked up Tata Chemicals there, and Valiant in our Diwali pick. We still feel that China plus one policy will benefit them, though because of this correction it has corrected even further more. But at this current juncture, we still feel it is a good stock to enter into it. If you have already that and you want to continue with that, you can continue that in an SIP mode. And even same for SBI cards. Now we have seen that the credit card data has started picking up again. With HDFC entering, the competition is becoming more intense, and people are more shifting towards electronic money than to the normal money. The credit card spends are increasing. For HDFC, you don't have a direct investment to be made. It has to be made through HDFC Limited and HDFC Bank. But for SBI, you can directly make it, and it has climbed up a lot. And also what is happening is that this car businesses will slowly transform up, because they are making their way. I can say that UPI is giving a competition to cards, but they are coming up with the offers where cards are also utilized in getting reward points, and that is not there in UPI. So there will always be tussle between two businesses, but still cards are favored because of their pointing systems and loyalty reward systems. That way I still feel you can hold on to SBI cards also.
Okay, because after the Diwali recommendation I entered, and periodically I'm also adding as part of like little bit in a SIP manner, but still I'm making a huge loss on these two stocks.
Yes, the
Valiant
stocks
is more than 35% down, and SBI card is more than 20%.
Yes,
After my averaging also.
Yes, both stocks are down. I am not denying that.
Right.
Okay, but
so you still feel that we can continue the SIP mode at least till the next Diwali, and does
you can continue to enter into the SIP mode.
Right.
Yes, you may do is that duration of the SIP can be increased from 30 to 45 days, since you have been sipping it previously also. So that way you can increase the duration of the SIP. But yes, at least in a longer term gestation, we feel that these stocks have a very strong potential of growth going ahead.
Okay, sure. Thanks.
Mr. Hemant, if you can again unmute and ask your question.
Sir. Sir, may I get recording of this webinar?
Yes, you will get the recording. When we'll send the presentation, the recording also will come with it.
Okay, sir. Thank you. Okay.
Mr. Vijay Matthews from Kochi, if you can unmute and ask the question.
Can you hear me? I just want to ask one question.
Yes, I can hear you.
Okay, regarding what do you call this? Nifty 50. I want to request a presentation on how we can. Usually I work on equity, but I would like to try some Nifty 50 or Bank Nifty. So how to do that? Can you give a very basic sometime in the future, basic course or something like that?
Yes, we do our basic webinars on derivatives also, as I can understand you want the question. You currently trade into cash market and you want to try it out on Nifty 50 futures or Bank Nifty futures or options, right?
Yeah, correct.
So what I'll do is I'll arrange one say in coming month or so, depending on the overall schedule. We will put one session for basics of derivatives also.
Okay, good, super. Yeah. Okay.
iPhone, if you can unmute and ask your question. There is someone who has raised your hand whose name is iPhone. Yeah. Yes, sir, go ahead.
सर हिंदी में बोल सकता हूँ?
हाँ सर, बोल सकते हो।
मैं बोल रहा हूँ अदानी विलमार खरीदा हुआ है मेरा 831 पे 200 और है ना LIC खरीदे हुए हैं 910 रुपए पे, तो उसको मैं रखूं कि ना सेल आउट कर दूं, है ना लॉस बुक करके बाहर हो जाऊं?
सर स्टॉक स्पेसिफिक क्वेरी जैसे मैंने पहले भी बताया, हम इस पे नहीं लेंगे, और LIC पे तो स्पेसिफिकली हम व्यू नहीं देते हैं क्योंकि वो हमारी पेरेंट है, तो कंप्लायंस के हिसाब से उसके ऊपर व्यू दे नहीं सकते हम लोग। बाकी आपका जो ब्रांच है जिसके साथ आप कनेक्टेड हो, उनको बोलिए कि मंडे को मुझे 10:30 के बाद कभी भी कॉल कर सकते हैं, तो मैं उस सारे स्टॉक स्पेसिफिक क्वेरीज आपको वहां पे 1-to-1 पे हम लोग एक बार सॉल्व कर लेंगे।
अच्छा ठीक है।
Pranav Kumar Mahato, sir, if you can unmute and ask a question.
Yeah, sir, I'm unmuted. Can you, I'm audible?
Yes, you are audible.
Sir, I was going through your classes since morning. It was very informative. I'm really impressed about your way of talking and giving us some idea about other than cash market. Actually, I'm handling your this account for last at least 10 years. I'm a 60 years old retired person from central government, and I'm really happy that आप लोग बीच-बीच में ऐसा करते हो, वेबिनार करते हो, बट अनफॉर्चुनेटली और अनफॉर्चुनेटली मैं इस क्लास में हमको बहुत ज्यादा सीखने को मिला, लेकिन आई हैव वन स्पेसिफिक रिक्वेस्ट फॉर ऑल द मैनेजमेंट पीपल्स दोज हु आर लिसनिंग दिस वेबिनार. That is how to handle your apps, means how to handle through mobile. See, we are sometimes in traveling, so trading is going on, or investing portfolio investing opportunities is coming while we are busy in other works, not sitting before a computer or a laptop. It might be we are traveling and doing something through mobiles. So your app, what through we are now investing. Basically, I'm an investor. I'm not trading. I have not. I am scared of trading. Your Rajiv Ghosh from Calcutta helps me a lot. But even then, I do not know how to handle your app, mobile apps. Only I know how to purchase a script in cash and how to sell it. Though selling is not my, I'm not selling. I have a huge portfolio with you. So I want that training class on how to handle your app in all means all options, or options means all the features I want to learn. How to handle best your apps by mobile app.
Got a question, sir. Amitwa, since sir is also from Calcutta,
Yes,
if you can
yes.
arrange a demo session for them, or someone can go to his place and show him all the features of our mobile trading app, plus besides
Absolutely,
that
absolutely.
the laptop based on entire training session, if it can be done, it would
Sir,
be good for him.
yes, sir. You can share your mobile number. I am calling from Kolkata only. So what we'll do is we'll arrange an appointment with you, and
Right,
we will send someone. So he will explain all the features, how we will be able to do trade and all. Everything will be explained to you, sir. So we will fix an appointment. You share your mobile number in the chat box.
I already shared it in chat box, and I have already sent a mail to Mr. Vora and Rajiv Ghosh, who might be my RM. So it will be better if you send some guy to my office. I am sitting at Bhavanipur. Any day at your convenient. I am every day. I am available at any
Next
time.
week, the coming week only we'll do it, sir.
Yes. It will be very nice for me because I have already a portfolio of huge portfolio with you. You can go through my mobile number. You can trace my ID.
So even if you don't have a portfolio, we're ready to give you a demo. Don't worry.
No. Now I am. See, this is an opportunity. From the classes I could come to know. I thank Mr. Vora that not only a cash trader, but there are ample opportunities in a volatile market to get some benefit when the markets are fluctuating. Okay, by option or by derivatives or by many means. I do not. I want to venture in that area also. I'm interested to venture, in fact. So if you kindly send some guy who can taught me or train me.
Absolutely, sir. Absolutely. Don't worry. We'll call you today and fix an appointment.
On Monday, they'll call you and they'll fix up an appointment, and accordingly, they will give you the entire demo.
Sir. Very good, sir. Thank you, sir. Have a nice day.
Thank you, sir.
So any further more queries, if you can raise your hands, please. I guess most of the queries are solved. If still also, besides this, if you have any queries, the email addresses were there visible on your screen. Kshitija, if you can just turn to the last slide, please. Yeah, there are those coordinates with you. You can put the queries there also, plus my email ID I've already shared. So I guess we'll conclude the session here.
Yes, yes. Thank you, everyone. Thank you, all the participants, and thanks to Miraj and Kshitija for this wonderful session. Now you can exit.